Have you ever thought of life insurance as just life insurance, this compartment of your financial life that offers a death benefit protection, but nothing more? Now, if you're in America, you probably do think of life insurance that way because most people think of life insurance just as a death benefit. But I'm here to tell you it's so much more than that. Life insurance has 7 distinct advantages, and I want to share those with you today because they have the ability to supercharge and improve and expand everything else you do in your financial life. I want to be really clear. I'm talking about a very specific type of whole life insurance that is specially designed for high early cash value and the maximum long-term growth. This is with a mutual company that pays dividends. Now, the other thing I want to point out before I get into the 7 advantages is that this is specifically a place to store cash. You would be thinking of this as a comparison to maybe a checking account, savings account, money market, or CD. We certainly never can compare life insurance to an investment because it is not an investment tool. An investment is something that you put money in, you hope it's going to grow, there's some risk attached to that, but we can't even classify life insurance in that category because life insurance has guarantees and safety. Now that brings me to the very first advantage of whole life insurance, and it's vault-like safety. Now when I think of something being as safe as a vault, I want it to be really, really protected, like impenetrable, formidable. This place that I know that if I put the dollars in, they're not leaving unless I take them out. Like a prison for my money, right? So I'm putting these dollars in and I want to make sure that the market crash is not going to affect that pool of capital. I want to make sure that nothing can remove those dollars or have them leak out or deplete somehow. I really want to make sure they're going to be there for me. Now, if I look at the bank, we think of a bank being a vault. We think of putting our dollars in through deposits and we can go access and use that money. I want to show you that life insurance companies have that vault-like safety. When I put my dollars into the policy through premiums, they grow cash value. And at any point in the policy, whatever my cash value amount is, I will never drop below that amount of cash value in the future unless I take the money out through withdrawals. Now, what that means is that I have growth on my cash value, and when that money grows, whether through interest or dividends, those dollars are safe for me, and I will never have less than that amount of money. So if the market crashes, I don't have to worry because my dollars are safe. Now, why can the life insurance company make those kind of guarantees? Now, there's many reasons, but one of them comes back to the reserves they hold. Now, in the banking system, because of fractional reserve banking, you can typically hold 10% of your dollars in reserves, meaning if $10 come into the bank, you hold 1, you can loan out the other 9. That means that if you put your dollars into deposit at the bank, and all of the people who deposited money asked for their deposits out at the same time, the bank could not satisfy that demand. However, with the life insurance company, they have more than dollar for dollar reserves, meaning if you've got cash value in your policy, they have dollars on hand to be able to provide to you. Now, the second major advantage is competitive growth on your cash value. Now, growth we usually think of in terms of an interest rate. If you're putting your money into a savings account at the bank, you might get maybe 0.5% of growth on that money, meaning I put $1 in and it might take 2 years for me to get 1 penny in returns or growth on that money. Now, maybe I could put it into a CD that's long term that maybe is going to have a little bit higher return. Maybe I could get a 2% growth on my money in a place to store cash with another vehicle. That's probably going to have a requirement on how much cash I put into that account and probably limitations on how many transactions I can have per year. When I think of the life insurance company, we need to think about how we're calculating growth. If we look at the dollars that you put into the policy in terms of premium, and then you compare that with your available cash value, you can calculate the internal rate of return. Now, because there is some early lack of liquidity because some of the costs are being paid inside the life insurance company, the first years are the worst years for internal rate of return on a life insurance policy. But if we look out to a 20-year mark, which is usually where we calculate that internal rate of return on a life insurance policy because it's meant to be this long-range planning tool, what we can do is calculate how many dollars we put in versus how much money we have in cash value and what rate of return would have been required every single year to achieve those dollars in cash value. Now, when we look at the internal rate of return of policies in this way, we're usually seeing between 3 and 5% internal rate of return on these specially designed whole life insurance policies. Now, this will depend on your age, your gender, and your habits, because some policies will have a higher internal growth rate than others. And the other thing I want to point out is that that rate of return is net of taxes, fees, and costs, meaning your taxes are already factored in. The third advantage of whole life insurance is unlimited access for your lifetime cash needs. So what does unlimited mean? Well, that means that I'm for sure going to be able to get to my money. If I have $100,000 of cash value in my life insurance policy, the life insurance company is contractually required to be able to give me a policy loan up to that amount of accessible cash value. Now, it's unlimited because I don't have to apply and be approved by the life insurance company. I just ask for my money and they send it to me. That means I don't have to prove I can repay or what I'm going to be using that money for. It's unlimited because there's no barriers to entry. Now, it's unlimited access for your lifetime cash needs. That means you can use it for whatever you want. You can use it to pay for college for your kids, for a wedding for your kids, for income for you. You can use it to buy a house or a rental property or any investment vehicle. And when you repay those policy loans, you can borrow the cash out again and recycle the use of that money. And the great thing is that if you're using a policy loan, your money continues to earn uninterrupted compound interest and you're able to use those dollars at the same time. Now, you can also access and use that cash value through a withdrawal, which I'll talk about in just a minute. Now, the fourth advantage of whole life insurance is tax savings. Remember I was talking about internal rate of return? The great thing about that is that when your cash value grows, it is tax deferred, meaning you don't have to pay taxes on the growth of your cash value every year. Now, you can also access and use that cash value tax-free through policy loans, and you can use up to the amount of money that you've put in through withdrawal also without paying tax. The other way you have great tax savings is that when you do pass away and the death benefit pays out to your family or loved ones or whoever is listed as your beneficiary, they will not pay income tax on those death benefit proceeds. Now, the fifth advantage of whole life insurance is that it offers the gateway to other income boosting strategies. And this is really important, especially later in life when you're looking for ways to increase your income. One is that it allows you to maximize the amount of Social Security income that you and your spouse receive, possibly by pushing back that start date of when you take the income. Another is that it offers the opportunity for you to take a reverse mortgage and use equity that you've built up in your residence for income and still allow the policy death benefit proceeds to replenish that equity to still be able to provide a legacy to your heirs. And I would say probably the most important way that it offers this income boosting strategy is that it allows you to spend down completely your other assets and still have a backstop for income from the life insurance cash value and still have a legacy to pass on. The sixth advantage of whole life insurance is privacy. Now, in most states, it offers creditor and lawsuit protection. And this part of whole life insurance is state specific. So you're going to want to talk with your advisor to figure out exactly how that applies to you. The seventh major advantage of whole life insurance is it is the number one most efficient way to preserve your legacy and pass down wealth from one generation to the next without having your estate limited and reduced by additional taxes. It is the number one way to be able to pass on wealth, much better than passing a physical property, much easier than passing on stuff, and certainly more beneficial than many assets that would have your heirs paying taxes that you deferred. So as we've taken this zoom out look at whole life insurance, I hope you'll reconsider that it is not just a death benefit tool. Certainly the death benefit is tremendously valuable, but as you understand these 7 advantages, whole life insurance gives you this tremendous power in creating true wealth that not only can build your own financial freedom, but also that can give the maximum benefit to the next generation and to the people that you love the most.